people who are experienced successful traders, they're people who have all gone through blowups. They're people who have all gone through large drawdowns, but they come back cycle after cycle after cycle because they know that they have what it takes to really do it.
Hello, everybody. This is Anthony for Investors Underground. Today, I have the opportunity to speak with an outstanding member within the Investors Underground and trading community. He has an educational background in business and psychology and holds an MBA in sustainable business and renewable energy. He began trading in 2016 and has traded through different types of strategies from trading to investing. Members of the IU community might recognize him from the chat as CL. It's my pleasure to introduce Mr. Chris Lanzilotti. Hello, Chris. Thank you for being here and taking the time to speak with me today.
Hi, Anthony. It's great to be with you, and I've seen you do dozens of interviews, and so it's an honor to be a part of one now. And I hope that we can provide a lot of value for IU members.
Absolutely. Chris, you and I got a chance to meet at Traders for a Cause in Chicago, and I'm looking forward to what we get to chat about today. And on that note, for those who haven't had the privilege of speaking with you, I'd like to start by asking, how did you first get interested in the stock market and trading?
Yeah, absolutely. And the Traders for a Cause event in Chicago was fantastic. That was the first one that I had been to, and I spent a lot of time listening to Nate and Lance. And when I heard that they were coming to town, and I'm based out of Chicago, I was really excited. I'm glad I got to meet you and all of them. Um, so, in a broad sense, I'd always been interested in business in general. I have a educational background in it. I'd always been trying to do entrepreneurial ventures growing up. A lot of my friends are entrepreneurs. And so I had a big fascination with business in general. And then in 2015, I came across a book called Money Master the Game by Tony Robbins. And it's a very thick, comprehensive book about a lot of different financial subject matters. And they do interviews with investing legends and traders. And so I really got a very thorough overview of what finance is all about, what investing is all about, and that kind of started the journey of really researching finance, investing, and that's kind of what kicked it all off.
You have an academic background in business and psychology. How did that influence you going into trading? What was your first experience with the stock market? Is it something that you learned about in school, or did you pursue, opening your brokerage account through some other way?
Yeah, so actually, while I was in school, I really had these two interests in business and psychology, and I didn't really know how to blend those. And I thought about maybe, doing some kind of you know, a business counseling or some kind of a psychology profession in the business world. And I really like psychology, business, and I really like strategy. I always have since I was a kid with games. And so once I kind of found investing in the stock market, I really was able to apply all the things that I really enjoyed, and it was like a door just opened up, and I've become really, really passionate about it, and I feel like I'm able to apply my strengths, my talents, and all towards something that is not only potentially very profitable, but something that's interesting and what I find to be meaningful.
And how did you learn how to trade? How did you learn the mechanics of, how to read a chart or, something about placing a trade?
Yeah, so I think it was in early 2016, the market was in a correction. I think it was due to some China headlines, or there was maybe some economic slowdowns around there. And so the market was correcting pretty hard. And at that time, a few things were doing well, like gold was starting to kind of pick up, and gold was coming out of a long bear market. And so I was looking through tickers and everything, and I was like, this is the one sector that seems to be doing well. And so I tried to do a lot of research about it. And so I was down the rabbit hole on YouTube videos, listening to people who were kind of the gold bugs, the gloom and doom types. And within that rabbit hole, I eventually came across a couple of really exceptional investors and speculators in natural resources. And there were people who were, had decades long careers of financing like mining companies, people who were mining CEOs. And so the natural resource sector is kind of the first one that I got a lot of education on and a lot of exposure to. And it's an interesting blend because we often think of trading on one hand and investing on the other hand. But in the middle, you have speculating, and that's a combination of fundamental research and then also market technicals and cycles. And so, listening to these really experienced guys who've been in the mining sector and seeing how cyclical it is, it was a great way to get an introduction to both the fundamental side and the technical side, and that's really what started my that influenced my style a lot, and that's how I got started for the first couple of years was in the natural resource sector.
And did you face any particular struggles when you first started trading? Was your first couple months smooth, or was there any learning curve that you had to overcome?
I think I tried to do a couple of trades. Like at first, just this seemed like it was down a lot, so I'm going to try to buy some reverse split name. Used to be 300, now it's like a dollar. So I'm going to see if I can get it to come back or something. But that was like the first maybe month or two, and it was just learning like a lot of the jargon, how to place a trade, things like that. But then once I actually got into it, within a few months, I was able to really invest in the gold and the silver sector as they were running, and so I actually had a very strong start in my speculating, investing, and trading career because I was just in the right place at the right time, and it was really not because of any particular talents that I had, but because I was just happened to be in the right sector. And so the first, I guess, cycle that I had within the first 6 months, I mean, I had probably a basket of 10 or 15 of these names, and a lot of them were doubles, triples. Some of them went up 5x, 7x. And I was like, I think I can really do well in this sector, and this seems pretty easy. And not really recognizing that it was not my own talents that were doing that, but more it was just the right place to be. And so it started off fairly strong, and then the struggles came when that sector cooled down, and I kind of learned about the cyclical nature of things and how even if something has great fundamentals, if you're in the wrong part of the cycle, and if you're especially not holding for years to come, you're going to experience large drawdowns. And so that was definitely a struggle. And I would say that the cyclical nature of markets in general, not just within natural resources, but that's a lesson that I've learned over and over again, just in different markets. And it applies not just to commodities that are cyclical, but tech stocks can be cyclical. The Fed cycle can be cyclical. And so there's a lot of different factors going on, and just recognizing that everything has a part to play in a cycle. That was eye opening. It was very humbling too.
I think you bring up a really great point about market cycles. And, you had mentioned that you were there at the right place at the right time for a particular market cycle and being able to profit as that cycle changed. Once the commodities that you were trading started to cool down, how did you respond to that? Were you looking at other potential plays, and what did that all look like? Where did you go, and how did you proceed once the market cooled down in the sector and the part of the market where you were finding so much edge?
I think what I really liked about the natural resource sector is that I was able to have a gauge for why the sector was doing well. I had a basket of gold stocks, and the price of gold was going up. And so I wasn't just looking at the technicals of a particular stock or something, but I was like, it was a very action reaction thing where action was the price of gold was rising. And then the reaction was that the basket would rise along with it. And so that influenced my style a lot. And I tried to look for other things that had that same kind of anchor to it, so I could follow something that was moving first, and then I could speculate and say, if this is moving, there's a very high probability that the basket of stocks in that sector will move. And so after the natural resource sector, I found that and so in I think in 2017 there was a large Bitcoin run, and I don't even remember what it ran to, maybe $500 to 2,000 or several thousand. Um, and I was like, I can apply the same things that I've learned from the natural resource sector to something that's not natural resources, but it is a cyclical sector. It is something that I can see an action reaction, kind of an anchor to it. And so I was able to apply that there, and kind of using that same speculating style where I see something that can move, and then I go look at the basket of stocks, and then I try to do fundamental analysis uh, to be aware of what are the best ways to kind of play this, because I could do it through different market cap sizes. I could do it through, I only did equity at that time. So I wasn't doing any options or anything, but I was just trying to find the best way to basically get leverage to that initial move of the Bitcoin price.
Okay, interesting. And that leads me to one of the topics I wanted to discuss, which is your trading style. How would you describe your style in your own words?
Yeah, absolutely. So I these days I have a very blended style and I try to basically assess what the market's doing and then I try to adapt whatever, tool from my toolbox I can really apply that to. And so my style is pretty mixed, but historically it's been mostly long. It's exclusively long on the equity side and I do puts and calls so I can go both ways on the option side. Um, but it was mostly long biased. It was small cap momentum. It was sector trades, the basket of trades that we talked about, and then what I would call the anchored speculations, and that's where you have something that is pulling, a price, a commodity, Bitcoin, something that I can clearly track, and then the basket that follows. And so it's kind of like the ship's taking off and it's dragging the anchor with it. So I had something that I could, really see: are these swing trades on the right track or are they not? And so initially, it was much more of like a swing trader. It would be multi-month thing. Sometimes it would be I would hold things for over a year if I would have a clean, multi-month cycle. But these days, I now do intraday. I do swings. I do. I really do probably 10 different kind of patterns or styles that I focus on a lot, depending on what the market's doing. And I try to just position myself so that I have a tailwind. And so I'm not fighting a market cycle. I don't want to be a long bias trader when markets are crashing. I don't want to be trying to short something or find tops when the market's going up every day. And so I try to see what the market's doing. Is it cleanly trending? And then try to join that.
Okay. And are there any particular indicators that you use to try to figure out the trend of the market?
Yeah, so it's actually kind of interesting. I almost use no market indicators. I have VWAP on my screen, and when I'm doing intraday trades, I do use that from time to time. But honestly, I don't think so much in terms of indicators to help keep me on track. I try to think of the structure and the cycle to keep me on track. And so I might be looking at, if for instance, if Bitcoin's going up at the end of 2020, I had a huge, or yeah, it maybe mid 2020, I had some huge trades in crypto. And so the way that I was thinking about it was not like using moving averages or things like that, but I was looking at price responding to basically stimulus. And so the thought process was basically we're coming out of a crash. There's going to be a lot of fiscal stimulus coming from the Fed. And then as a result from that, most asset prices should rise. And so the speculation or the question that I was asking is that is Bitcoin going to make new all time highs? And I came to the conclusion that it was. And so I positioned myself very early on in the crypto stocks. I did fundamental analysis and I picked a couple and I was able to ride them for most of that cycle. And so it was more of a speculation base of will Bitcoin make new all-time highs? And if so, then these will probably also make new time highs, which they did. And so I try to think about that and then the structure of the actual stock itself. And so is this a dilution machine? Does it have good management? Does it have good profitability? And so when I'm looking for something for a multi-month swing or more of an investment or speculation, it's like what Nate talks about of, when you're doing a long trade or something like that, you want to line up on the intraday, the daily, and you basically want to have as many factors working in your favor as possible. And it's the same thing with speculation, where I'm doing fundamental analysis to see, is this company actually getting better and better as the cycle goes on? Is the management good? Is it keeping it on track? Is the commodity getting better? And so I'm looking for 5 or 10 really key factors to all be spiraling upwards. And then I want to be a part of that. And then if the price of Bitcoin or if the fundamentals of the company start to deteriorate and those fall off, then you can think about kind of supply and demand as having layers. And when something goes wrong, kind of like the demand layers start to fall away one by one. You'll have institutions leave, you'll have hedge funds leave, you'll have retail eventually leave. And it's the same thing with supply. And so I try to think about kind of who's in it, why is it running, what are the factors that matter, and I look for a confluence of things that are all moving in the same direction. And so I kind of use those as my market indicators instead of actual moving averages or things like that.
Very interesting. And it sounds like you're doing a combination of fundamental analysis and maybe looking at some charts, maybe looking at some of the technicals I would imagine. Is that accurate?
Yeah, I look at price action a lot. And so if I'm doing a long trade or a multi-month swing, I want to see volume increasing. I want to see price increasing, higher highs, higher lows. I want to see basically bullish, demand. So when dips happen, what happens next? Um, Nate actually talks about maybe on a shorter time frame, but like the wicks or things like that. And it's basically it's like I think of it like a scout. And so it's basically you have price go either up or down. It flicks down, flicks up, and it's like sending a scout into that demand or the supply zone. And what happens to the scout? Does it get do they spit it right out and it goes back, or is it clearing the path for more action ahead?
And when you're looking at the fundamentals of a company, if you zoom out, do you think that your background in business and having an understanding and a grasp, maybe of being able to read some of the fundamentals of a company, comes in handy and something that you apply in your trading?
I do think that it helps, but I don't think that it's necessary. I think that anyone who has a desire to learn fundamental analysis can do that. There's great books on it, and I spent several years really learning value investing. Listening to all the Berkshire Hathaway annual meetings were like 6 hours a piece, and I would go through all those. I've read Securities Analysis, The Intelligent Investor, and so I've read a lot of kind of the classic books on like how do you value a business based on its cash flow, its revenue growth, and things like that. And so while I might have been more inclined to look at those things because of the business background and thinking of the stock as a business and a stock, I think that it you don't have to go to school for that. I think that anyone who has a desire to learn, there's ways to do that. But yeah, I absolutely look at fundamentals. Not so much. I look at them less on shorter time frames if I'm just doing a day trade or something, because you really don't have time if you're doing a quick breaking news trade or something. You can't spend 2 hours doing fundamental analysis on something. It's more just action and reaction. But if I'm doing something where it's either a big potential investment or a large speculation, then I will spend hours and hours digging through the financials. I'll look at the balance sheet, income statement, statement of cash flows. I'll look at the management team, their track record. I'll see what their revenue history was, their debt levels, their cash levels. Do they need to raise cash? So I'm looking at a lot of factors because for a very multi-month swing or something of that nature, you really need those factors to be going in your direction, as opposed to someone who's going to be diluting and the business is not going anywhere. It's spinning their wheels and they're just a kind of a trash company trying to keep up with a good sector.
And what percentage of your trades, if you had to guess, would you say are intraday versus more of the longer term, whether that's weeks or maybe even months or years?
It really depends on what the market's doing. So for the last year and a half, basically since the Fed tightening cycle, I have done very few swing trades. There's been a couple of times with like the AI stocks. I've been able to catch a sector move, but honestly, most of the time when I was doing a sector trade like that, I was in more of the small cap space. And so we had at the beginning of, I think it was the beginning of this year, we had some of the small cap AI stocks start to run, but they run for a week or two, and there's no follow through with it. And so I've shortened my time horizon as we're still in a difficult market and where we're still fighting the Fed in some ways, and there's quantitative tightening going on, and so liquidity is not exactly what it was. Things have a lot of spike candles, and then they putter out for however long and kind of go back and they round trip to where they came from. And so for the last year and a half, I've been doing mostly intraday or sometimes for 2 or 3 days, but very few long term swings. And I would say that part of my swing style is similar to Cody's, and I think that it's been a difficult market for that. And I really had to do a lot of work to find setups that were for a downtrending market and applying my option strategy to that. Because even though I've been doing options for several years, I focus almost exclusively on the long side still. And it's a little bit different doing puts versus calls, but it's pretty much the same concept. But I think the difference was that my mind wasn't really wired to look for how to capitalize on something that's crashing. Because with the value background, the value investing, if crashes were happening, I'd be like, okay, fine, I'm going to let it crash, and then I'm going to sort through kind of the rubble at the bottom, and then I'll go long on something. I'll try to kind of bottom ticket, and that's very different than capitalizing on the waterfall of it going down. And so I really spent most of early 2022 developing new strategies for really capitalizing on downtrends.
And it's interesting that you mentioned Cody, odd stock trader, because one of the things that strikes me about your style is that similar to his is making this basket of stocks that might run. Do you also tend to focus on equities, or it sounds like maybe you focus more on options? Is there a particular percentage breakdown between options versus equities that you tend to trade?
Yeah, so in this market, I would probably say I'm 70% options right now and a lot less equity. If I find a clean trend with small caps or something, then I will do some trades or short squeezes every now and again. I'll be able to find a parabolic, and if equity is the only way to play that, then I will do that. But I do a lot of options because you can get more leverage, especially if I'm doing intraday trades or something for a couple of days. I let's say Nvidia or something's trending really well, I might have some weekly calls on it, and then if it starts going my direction, I can make it free, sell half of it, and then let the rest ride. And so I take most of my risk off the table and then try to get that upward leverage. But it's been a difficult market to have things that trend for multiple days, because a lot of times what we see is you'll have something gap up and then kind of stall during regular trading hours. And so even if you're trying to short it, long it, calls, puts, equity, it's difficult to get a really clean move because they tend to happen suddenly. And then there's just a lot of like drift and chop.
Is there any particular trade or set of trades that you would say is a great example of how you like to trade, and a trade that worked very well based on how you expected it might be and how it ultimately played out?
Yeah. So I think the best trade of my career was in a company called Hive Blockchain, and that was after the 2020 crash, and the Fed started doing a ton of stimulus, and I had that speculation of how are we going to get out of this mess? It's through the Fed basically pumping money into the market, and then if that happens and things start going up, you're going to get very high beta things or highly volatile things like Bitcoin that should do well with that if it's a risk on environment. And so the speculation was, will Bitcoin break all-time highs? And I came to the conclusion that yes, it would. And so then I went through the sector and I tried to pick the best names from a fundamental side. And so Hive Blockchain had a great management team. They were using 100% renewable energy for all of their mining operations, which helped several months down the road when that was a big controversy of dirty Bitcoin mining or versus clean. And so I looked for the management team, I looked for the company, I looked for something that was increasing cash flow, increasing revenue, and they actually mined both Bitcoin and Ethereum. So they had an extra kicker of revenue for that. And so the stock went from I think I entered a very large swing position in maybe 38-cent range or something like that, and it ended up going to $6 or something over the course of almost a year. And so that was probably one of the best trades that I've ever done. And it was a combination of fundamental analysis, macro analysis, the anchored speculation. It was just all the things that I really enjoy. And it kind of was just a perfect storm for all those things to come together. And another one of my favorite trades, and notice I'll only highlight my best trades. I'm not, I won't dive into some of my biggest losers here, but another trade that had, there was a good kind of summary of my style was there was a stock called SPRT that went totally parabolic. It was a crazy short squeeze. I think it was sometime in 2021, and it went from $5 or $7 to 50 or 60 or something. And Nate was actually warning about it on the short side, saying it's a washing machine for shorts. People are just, the volume's rotating, people are trapped, and it's going to keep going. And so in the early days of when that started, I dug into what was happening with the stock, and it was basically a company that was, I think, merging or buying another company. And the reason that they were doing that is because the company that they were buying had a lot of deferred tax credits, and so something that would be really important to their fundamentals. And they also had the incentive to get the price as high as possible, because that their management bonus was based on the level of the stock price that it went through at. And so you had, I identified the incentives of the management, basically why they were doing something, and then it had super high short interest, and I could really visualize why was this happening and why was this likely to keep going. And that was probably my second largest trade, but it took a week or two instead of a year to play out. And so I think that was another example of kind of all my trading styles coming together.
And how do you find these stocks, whether it's a basket or a particular stock? What's the process look like for scanning for them or researching how many different companies there are that fit into a particular potential basket that you might trade?
Yeah, so usually I would say like Cody, I try to read a good amount. I try to be up on, what's happening, what are the new trends, and what's something that could potentially go viral. And I've actually done a lot of study on why things go viral, why content pieces go viral. And I basically look for themes or sectors and say, is this likely to be the viral sector, just like AI was, or like Bitcoin was, or like gold, or something like that? Is this likely to be something that will generate viral demand for it? It has a great narrative. It's easily understood by retail. It's a clean trade. It looks good for hedge funds to have it on their books. Like it could be, Tesla that had like the EV sector, the renewable energy, the ESG, like all those factors. Like why is something likely to have viral demand for it? And it's usually when a whole lot of uh, kind of undertones come together. And so you might have 10 influences that all lay on top of each other. And that causes something to really have an outlier move or, be the outlier sector for the year. And so I try to identify what are the sectors that are likely to do that. There's no real way to get a great, basket of stocks without actually, Googling things and, diving into what is the sector, what are the top five names, what are the peers, like what's a new company, what's a company that's been in this for a while, and just kind of getting familiar with the top 10 names or something, and then just try to find the two or three names that are going to be the best vehicles to play this if it works out. And so, over time, you build up those lists, whether it's for cannabis stocks or gold or crypto or anything like that. And then basically, you know, you'll come across a market cycle where one of those is going and you're much more prepared. And if you're a day ahead of everyone else, for someone who's like swing trading or doing something for multi months, I mean, you might be able to get in a day before the real volume comes in that could boost prices by 20, 30%. And that could be your cushion to ride it for the next 3 months. And you have that edge because you're prepared for it.
One of the questions I had related to that was, when do you start to research for a potential basket of stocks? Is this something that you're doing as soon as you see a headline and you start realizing there could be potential for this, new sector or theme to go viral, or do you wait until things start moving and then you start to build this potential basket? How far in advance are you doing the work?
I would say it really depends. For like the AI sector, as an example, you know, you usually have some kind of event like ChatGPT was launched, and you could see the statistics of how many people were using it, and so you can kind of think about, okay, is this likely to be a viral theme? And if something has that potential, I'll start researching it right away. What are all the names and the small caps? And I branched out now to including some of the large caps because I do options now, but it used to just be the small cap basket. And so if I feel like something really resonates with me or it could resonate with other people, I'll dive in right away. And now, what usually happens with these sectors or these viral themes is that they'll eventually get two or three secondary or sub themes. And so, for instance, with the cannabis stocks that ran in 2017 or something, first it was the cannabis names, it was the growers, it was companies that were producing. And then after several months, and those are kind of played out, then it went to the CBD drink names. And so it's basically a subcategory. It's related to cannabis, but it's its own thing. And usually a lot of the speculative money starts to roll off from the first theme and goes into the second theme. And so those develop as the cycle goes on. And if I can see that this is going to be a sub theme of a main theme, then I'll dive in and I'll do the exact same thing. I'll research the top 10 companies and try to get, which is the most fundamentally sound one? Which one could I play with options? Which is most likely to, have a parabolic? What has the tightest share structure? What has the best promotion? Who has the best management team? What do people know about? What do they associate with this sector? And so it's basically that process of just being able to identify, what could be a viral theme, and then looking for the secondary themes. And then whenever something really just strikes me or resonates, that's when I'll start to do a deep dive on it.
And when you're putting together a basket of potential stocks, um, are you buying all of them, or are there certain red flags that you might see where you'll just, scratch that off the list because it's something you don't want to be involved with? How do you really think about and finalize this basket of stocks that you might be placing in a trade?
So what I'll do is I'm usually pretty selective about the things that I would invest in or um, swing for multiple months. And so I'll try to go in and see which company has the best, fundamentals, the best management team, the best operations, and those will kind of be the names that I would go to for a potential swing or a multi-month hold, or up to a year or something like that. And then what will happen is that the crappy names, the names that are, they have bad management, they're always raising money. Their stock price looks horrible. They have nothing else going for them except they have the name of the theme in their company name. What I'll do is I'll use those for day trading names, but I won't swing those. And so a lot of times the names that are really, bad and not good, they'll have very low market caps. They might have, a ton of shares, outstanding or things like that. And you can just tell with a lot of these companies, they're just trying to capitalize on it, but they can still get really great volume, and where they spike. And kind of as the sector gets flooded with money. And so for the AI sector, the cannabis sector, the Bitcoin sector, whatever it is, you'll have basically sector saturation with money. And so let's say that there's, $10 billion that's going to flow into the CBD sector or something like that. It'll start with the best names, and then it'll kind of trickle down into all the crappy names. And like the more that the sector gets saturated and that money is going lower and lower on the food chain, you'll get to the really small, the really bad companies, which you can use for very quick trades. That way you're not in line for dilution risk or something like that, but you can still capture the name. And so, yeah.
How do you implement Investors Underground in your trading?
Yeah, so I would say probably three ways. One, following the leaders. Nate is, and all of you guys who are leaders and there are exceptional traders. You have decades of experience between you guys, and you have really found niches and things that work. And so things that can kind of increase my probability of trading is by listening to you and seeing, what do you guys do that works consistently over time, and the thought process behind it. So it's not just, oh, this is probably going to go down and this is probably going to go up, but why is it going to go down? Why is it going to go up? Like with a liquidity trap setup or something, it's not just a technical thing, but you can actually visualize the structure. You have a huge volume day, you have a lot of short volume and long volume, and then the volume drops off for a couple of days. And it's like someone still has to get out. And if you see it, start to uptrend, you know that there's some short covering that has to happen. And so I really like learning setups like that where I can visualize almost in 3D of what's happening instead of just, oh, because it broke this level, it should do this. But I want to know why will it do that. So that's the first reason, or that's the first thing I really get from IU is listening to the leaders. The second thing is all the technology that's in there now. The scanners, it's unbelievable what you guys have done. There's high a day, low a day alerts. There's breaking news. There's categories. There's volume profile. Like there's so much, and I have that up on my screen every day. And so if the market's trending in one direction, I'll look for things that are trending in that way. The strongest names. So if the market's trending up, I'll look for the names that are constantly making new highs and see if I can trend with that. And the same when the market's crashing and things are making new lows, I'll try to join that. And then the third way is basically just following the community and getting all the breaking news alerts. And you're basically crowdsourcing information as it's happening in real time. And so following the leaders, looking at the technology, and then also getting the crowdsourced information is really, really beneficial. And IU is a great place for anyone who wants to improve their trading to really capitalize on those.
Chris brings up a great point that regardless of your skill level or trading style, Investors Underground has something to offer all traders. You'll have access to mentors and courses to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused traders who share their trading ideas and analysis in real time every single day. You'll also have access to Nate's morning broadcast, Sam's midweek study session, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with Chris. Thank you. I think that's incredibly helpful. And I think you outlined some of the very practical ways that Investors Underground can appeal and be useful for traders out there, and not just traders of one particular style, whether it's, small cap equities, but, for an example being yourself, traders who might be using options to express their trades or might be focused
Mhm.
on something completely different than, other members within the room. So I think that's tremendously helpful. And Chris, I wanted to ask about risk, how you think about risk when you're going to be getting into a trade, and how you think about risk in terms of reward and probabilities.
Yeah, and so those three things, risk, reward, and probability, that's what I think is key. You have to frame every single trade that you do with those three things. And I think that traders of all skill levels can improve if they really do that, because people who are experienced will kind of know intuitively to focus on those three things. But once you focus on them, you can really spend a lot of time optimizing and focusing on each one individually. And so, starting with risk, risk is basically what you're willing to sacrifice to participate in a trade. It's the price you pay to figure out if you're going to be right or wrong. And so, defining your risk and trying to lower it, and then basically you have to customize risk too, because risk, or if you're risking a dollar amount or a percentage amount, the percentage amount is going to be very different on an option versus on an equity. And so if I'm doing a weekly option, like I was saying, if I get something that's trending well, I'm looking to take my risk off the table as quickly as possible, sell half, get out, because you can't really use stop losses in the same way with options that you can with equity. And so using smaller size, making free, and then trying to get a continuation of a move is really important with options. With equity, using key levels or a confluence of things of why is this a good level to have an entry at, and then having your stop loss below that. And so if a stock is has a really strong support level at, let's say, 150 or something, and there's a confluence of reasons why it's strong. Could be a key historical level, could be a capitulation level, or could be short interest, there could be a lot of different things going on with it. And so I'm trying to figure out, why is this a really great level to have an entry, and then putting my risk as tight below that as possible. And so I might be able to participate in $2 or $3 of upside for 10 cents of risk or something. And those are the kinds of things that I'm looking for, something that has a very low controllable amount of risk. And then going to the next part of what you asked, reward. And I think that this is really where traders can make huge strides in kind of changing as a trader. It's um, risk for most things is pretty similar. So let's say you're talking small cap momentum or something like that, and you want to go long on a stock. You can control your risk underneath a certain level pretty tightly. You can control it at 10 cents risk per share or 20 cents or something like that. And so that risk is kind of fixed. But what you have a lot of opportunity to do is pick setups that have more reward than others. And so I might be risking 10 cents to try to make 20 cents or 30 cents. And that's okay. But if you can kind of be a little bit more selective and look for things that have 5x reward or 10x or 20x in the case of certain options or things, the risk is almost the same. And so just eliminating the lower reward setups and really focusing on the high ones. And then that brings me to the next part, which is the probability. And that's basically, what percent are you going to be right versus wrong with a trade, with a setup? How likely is this to play out in a way that benefits you? And that takes a lot of experience. And a lot of times, what happens is that people might go after the really high reward things, but if they're very low probability, it doesn't really help you, because then it's more of like a lottery ticket where it's 1 in 100 might work out and might have a huge payoff, but you really have to take the risk, the reward, and the probability all together, and basically have things that are low risk, high reward, and high probability, and that will spit out an expected value that's very positive. And so anyone who's struggling with trading, or anyone who wants to optimize, look at those three things of risk, reward, and probability, and write out a page on each one and see how can you optimize each of those things to lower your risk, to look for things with higher probability and things with higher reward. And that is basically your business model as a trader. And the results are directly tied to that over the course of 100 trades or 1,000 trades. If you have an expected value that is much higher due to good inputs versus an expected value that's much lower, because of bad inputs, your P&L will follow that.
Is there a certain type of risk to reward ratio that you've set in your mind as the ideal for you to get interested in possibly entertaining a trade, like 2 to 1 risk to reward or something much higher than that?
I will say that part of this depends on the market cycle. And if you have a period for 3 months where there's just not a whole lot of really incredible trades, you have the option to just not really trade much, and that's an option for people. But if you are going to participate, then you probably have to lower your reward standards a little bit. You don't want to do it too much, but it might be more like a 3 to 1 ratio, and that's on the low end for something that I look for, as opposed to a 5 or a 10 reward to risk ratio. And like we talked about before, risk is pretty much fixed for a lot of different things. And so just focusing on what is this market cycle? What are the things that have magnitude? If you're in the beginning of a bear market, the things that have magnitude are the retail crowded names that have been hyped up that are slowly, the hedge funds are leaving, the institutions are leaving, and retail is kind of the last one to go. And once that kind of hits a tipping point, the magnitude is in that waterfall. And so you might have something that will move, 10, 20% on the equity side, or 30% in some cases. And if you're looking to participate in something like that with options, you could be talking a 10 bagger or something like that. And so really looking for where's the magnitude. And it's the same thing. That magnitude is going to change with the market cycle. And so at the beginning of a new bull market or the reflation cycle, you're going to have the magnitude on the side of things that are where are institutions getting into, where are hedge funds getting into, and then retail is the last one to really push it up. And so you might have those 20 or 30% moves, but on the long side. And so you really have to adjust, you have to figure out where's the magnitude in the market and then try to align your strategy and the tool, the vessel that you use for that. So whether it's, equity or options, I may be looking at a stock and have two different ways to play it. I have to pick the right vehicle to trade this. Is the risk controllable? What's the reward if I'm right? And so that's what I would say on that.
One of the questions that I wanted to ask you, Chris, related to probabilities is how might a trader know what their probabilities of success are in a given trade that they might be interested in taking on?
Sure. So I think the first thing to look for is a setup that it's fairly understandable. It's fairly clean. You have so many stock patterns and things that are just they're choppy. They're kind of messy. You don't really want to focus too much on those because you're trying to optimize something that is inherently choppy and not clean. But if you can find something that is a very clean trend, is very repeatable, and a way to do that is to either learn a setup from someone who has used it consistently for a very long time. We use the liquidity trap example that Nate talks about. With you have a stock that has a huge day, lots of volume, and then basically it just stalls. And it's like you have trapped longs, you have trapped shorts, and someone's going to get out first. And basically the price action will tell you, is it the longs that are going to get out, or is it the shorts who have to get out? Like who's stuck? And so focusing on trades that have a very clear, predictable pattern is key. And so learning that from top traders or from your own observations, if something really makes sense to you, even if it doesn't make sense to other people, if you can see it time and time again and let it play out, then you have a clean setup to really optimize there. And and this is an area that I really need to improve, is really tracking things a lot. I do a lot of things just in my head, and I watch a lot of things. I'm very observant, but I really need to get better at having complete lists of what are the actual statistics on this pattern versus just trying to find something that's very clean, very predictable, and then you can see over and over again. But I would say for predictability, it's a lot of experience, a lot of screen time, and just seeing how things play out, and then really looking for things that are repeatable and things that have worked for top traders for a long time and that makes sense to you.
Okay, thank you. I think that's incredibly helpful. And I wanted to talk a little bit about some of the psychology that goes along with trading and investing. So I don't want to really discuss specifics for particular trades that didn't perform well, but how do you bounce back from a trade that didn't do so well? Do you take some time off, or do you just get right back on and trade the next day or look for the next potential trade?
Yeah, that's a difficult one, and um, in my early days of investing, one of the natural resource guys always stressed the importance. He said that the biggest risk to investors is not the market, it's not the cycle, it's not the company, it's your own mind, pretty much. And it could be, extreme greed or extreme fear causing you to do things that are really not in your best interest. And so the psychology of, after if someone has a really large loss or a big drawdown, and that will happen, there's, you try to do the best that you can to frame a trade and control your risk and everything, but anything can happen in the market. The market doesn't have to do anything. There are things that are highly probable, but you're going to get caught in bad situations from time to time, and that's just a part of the nature of being involved in the stock market, or coming across a new cycle that you don't know and having large drawdowns from that. So I think that the main thing is just to have a very resilient mindset, and to basically know that no matter what I come across, if I'm committed to this, if I put in the work, I'm going to come out the other side. And it might not be, I might need help along the way, I might need mentors, I might need to you know readjust or kind of take a step back. But as long as you're committed to something, it's basically knowing that I'll figure it out eventually. It's just, if you're an intelligent person, if you're working really hard, if you're following mentor, like, it's statistically very improbable or improbable that you're not going to succeed. You just have to basically do it for long enough to get the odds in your favor. And so I think, like, when someone's either starting trading or whether they've been in it for a long time, it's accepting the fact that you will have really difficult periods, and to basically be committed that no matter what I come across, even if I have to take a year off, go back to a job, even if I have to restart, if I blow up an account, it doesn't matter, because the asset to a trader is their process. It's the person themselves. And then money will come and go. But if you're developing as a trader over time, you will have more and more money. And you might have not made it this cycle, but you'll make it the next cycle. And people who are experienced successful traders, they're people who have all gone through blowups. They're people who have all gone through large drawdowns, but they come back cycle after cycle after cycle because they know that they have what it takes to really do it.
What advice would you give to traders who are struggling? Maybe they don't have a process right now, or their psychology is really tricking them to get out of a trade too quickly, or they're too fearful, and so they'll miss an entire trade and never even enter it. What advice would you give to those who are struggling to become profitable?
Yeah, I would say that really apply that, the three things: risk, reward, and probability, and draw that out for every single trade, or have that in your mind for every single trade that you make. And if someone's lacking confidence, or if they're a little bit too fearful, then do it with one share of something, do it with two shares, get the muscle memory in place. The money doesn't matter. You can paper trade for a while, but I would say that just get it to be a part of your routine of doing that. Have your risk, have your reward, and have your probability, and then draw out all the things that you can think of on a piece of paper, a whole page for risk. Why was this a good level to get into? What was keeping it at that level? For reward, why did this have magnitude? Who is either coming or going in this stock? And then with probability, is this a clean setup, or is this chop? Have I seen this? Am I able to prove that this is a likely thing that happens over and over again? And why is it likely? And who else uses it? And so framing your trades in that, I think, for anyone who's struggling or anyone who wants to optimize, I think it's just incredibly beneficial to do that. And for anyone who's considering like quitting or giving up, it's like, trading is not that different from a lot of other, highly professional, sometimes highly professional jobs, like an attorney. Like, imagine someone who is trying to be a lawyer who just, read some articles, gave it a shot for a few months, they go into a courtroom and they lose. And it's like, yeah, well, of course, like, it takes years of intense study and all these things to become an effective attorney, and to do this consistently over time. And I think with trading, because anyone can do it, or anyone can get introduced to it, it's very easy on our phones, that you think that, oh, if this isn't easy, it's not for me. It's no, that it, not necessarily that it's not for you, but you have to apply professional attitudes to doing that, just like a doctor would, or a lawyer would, or someone who's a general contractor, someone who has to master a craft. And I think that if someone is considering quitting, I think the answer that they need to, or the question that they need to ask themselves is, do I want to do this at a professional level? And if so, then I have to take steps to really, back up that claim. Otherwise, if I want to be a hobby trader, people can do that. They can participate from time to time, wait for a really hot market cycle, try to get in somewhat early, read a lot, and then let your winners run and try to control risk the best that you can. And you can do that for when there's a hot sector. But if you're going to do this day in, day out, there's no way that you're going to do it over time profitably unless you put in hundreds, thousands of hours, to really master this craft. It's a craft like anything else.
Thank you so much. Yeah, and to your point, the barrier to entry for trading is so low, and
Mhm.
the expectations might be low for so many traders out there, but to do it at a professional level takes, as you mentioned, a lot of time, a lot of energy, focus, and dedication. One of my questions is there any particular benefit in your mind to having trading peers and a network of traders that you can learn from and bounce ideas off?
Yeah, absolutely. I think it helps a lot to have, people that you can talk to about setups or other things. And I think that there's a couple of different ways that people can go about that. I think it's either following like mentors, whether you know them in person or not, like someone like Nate or like you guys, try to find someone who's doing something consistently well and really get into their, persona of like, okay, I want to learn what this person's thinking about, why they're thinking about it, and kind of understand how their process works. And being able to do that is a huge benefit. Now, other than having mentors, I think having people who are, at the same level or slightly better than you to bounce ideas off of in real time is a great thing too. And I know that Investors Underground, there's a great, chat room. There's the Traders Lounge. There's ways that people can really connect and ask questions, and Nate or someone will step in and answer those. So I think it's incredibly important to have people that you can talk to about it, people you can, give you honest feedback and be like, no, this is not a high probability or a high probability trade. This is not good risk management. This has outlier risk that you don't even realize. Like Nate talks about that, and he and I had actually responded to a couple things on Twitter about some of these low float stocks. And people who are not familiar with the sector, they don't even understand what some of these things can do and why they can do it, and how far they can go. And so someone might be thinking that they have decent risk control, but they don't understand that something can go from a circuit halt to a circuit halt. And then, if there's extremely limited supply, it's like the analogy of a hose with a nozzle. If you have, different settings, like sometimes it's like a wide, easy spray of the hose, and sometimes it's like on rocket mode. And if you have something that's constricted enough, even if it has normal demand, you can have something that goes from 20 cents or 50 cents to $60. It can happen. And if someone's, shorting it, then that is your actual risk. It's not the 5 cents that you planned on. But if you have that deer in the headlights moment where you're like, oh my gosh, I didn't even realize that this could happen, and the market changes and new things come along that didn't happen before, the HKDs or things like that didn't happen before. You have more people in the market than that have ever been there, more retail people, more people are shorting, and you have these odd structures that pop up in very limited supply, viral demand, and you have people who know how to hunt for those things. And that's a combination of risks. And if someone wants to do this for a long time, they have to be aware of the things that, what are you playing Russian roulette with? Basically, you might win, 60% of the time or 80% of the time, but if you lose once, is your account gone? And that's a risk that people who have a lot of experience will try to warn about. But until you kind of go through something, it can be difficult to listen to the warnings.
Thank you. Absolutely. That's a great point. Having a social network, having peers, and being open minded to listen to what the more experienced traders or even those who might just be doing a different type of research, being able to connect and hear from others might be incredibly helpful for traders out
Yeah,
there. Yeah.
absolutely.
Chris, if it's okay with you, I'd love to go through a lightning round set of questions, quick questions and quick answers. Is that okay?
Go for it. Sounds great.
Great. My first question is, what do you consider to be your greatest strength as a trader?
I think the ability to apply some fundamental analysis, some market psychology, understanding the cycle. I think it takes trading from being two-dimensional of a line on a chart to more three-dimensional of understanding the structure and what else is going into it.
What would you say is the best piece of trading advice you've ever heard or read or been given?
That even if you didn't do well today, you have every day for the rest of your trading career to do well. And it's basically just saying you have to, whatever happened today, it already happened, and you can come back tomorrow and you can do better. And it's within your control to do better. And you can optimize, you can learn new things. And so never to fall into a place of despair saying that I can't get out of this, but just having confidence in yourself that no matter what happens, you will be able to come out the other side of it. And so even if it didn't work out today, you can always come back the next day and do better.
Do you believe there are any myths or misperceptions about trading?
That it's either too easy or it's totally impossible and it's just gambling. And I think people who get into the right sector at the right time, they say trading's easy. I don't need to listen to Nate. I don't need to listen to all these different people who have been through, 20 years of market cycles. I don't need to listen to them because I have this figured out. And so I think the overconfidence that comes with someone who's very new, that's a misconception that trading is easy. And then some people who are super skeptical saying that trading, it's impossible, no one can do it, it's all gambling, and some people just are able to do it for a while. And neither of those are really true. It's a professional activity, and if someone does things consistently, if they focus on their risk, their reward, and the probability, you can do it, but it's very difficult.
Is there anything that you do away from your trading desk that you believe benefits you once you get back to trading?
Yeah, definitely. I think that you have to take care of yourself. I try to exercise multiple days a week. I think you have to get proper sleep, and then honestly, I think like associating with just great people really helps not only with trading but in life. Just people who are supportive and encouraging, and people who are intelligent and ethical, and just people who make you a better person, not just a better trader. But I think that the people who you spend time with and the people that you look up to, that's a huge part of trading and also life in general.
Do you tend to use hard stops or mental stops?
I customize depending on what I'm trading, the market cycle, and a lot of other factors. And so I try to optimize for each trade. And so it would not make sense if I'm doing an SPX put, a same day put. I'm not going to have a 20 percent stop or a 30% stop on something because they move too fast. By the time I enter it and I go to put on my stop, it could already be blown out. And so you have to control risk in a way that's appropriate for the vehicle that you're using. And so that could be reducing size so that, instead of risking $1,000 on something, just only put in $1,000 and, let that run if it works, and just focus on very high probable trades with huge payoff if you're going to take that risk to do it. And if I'm doing something with small caps or something where, it's not a super high conviction trade, but I can, run it. It's a multi-day runner or something like that. If I have a stop loss in place, I can kind of ratchet up my stop as the stock's moving up. And so I'll use a hard stop with those things just to lock in along the way, because I'm not doing a whole bunch of fundamental analysis on it. I'm more just riding, the news, the hype, the trend, the momentum. And so having a hard stop in place can keep me out of trouble, because one of the flaws that I have as a trader is that because I have such a blended style is that I can accidentally use the wrong rules for the wrong setup. And so I might be too stubborn to hold something because I'm used to doing that with high conviction swings. But if it's something that's just a random runner that I don't have high conviction on, I have to put away that toolbox that I use for one style of trading or investing, and I have to put on the other one. And so I think that people have to optimize and customize their risk profile and how they're actually trading these different things. And a lot of times they require different skill sets or different tools to do it.
And for those listening who would like to learn more about you and the way that you trade, or maybe even contact you, how can they do so?
Yeah, absolutely. So I'm not super active on Twitter, but I do have a Twitter account. I look at Twitter every single day, and I look for news and things like that. So if I get a DM, I will see them. So my Twitter handle is Chris_J_Lance.
Well, Chris, thank you so much for taking the time to speak with me today. We got to cover a lot, and I think this will be really helpful for the traders out there who listen. So thank you so much.
Thank you, Anthony. This was an honor, and I hope that a lot of people get some value from this and they're able to continue on their trading journey with IU.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.